Oliver, by far the most interesting banking case at the moment in the UK is RBS, that once mighty bank that's been brought to its knees. I guess one thing you can say for sure is there aren't many investment bankers there will be hit by this new bonus directive. But let's talk about two things: how RBS is doing at the moment, it just had results today, and how we get from here to selling the government's 80% stake. So how's it doing at the moment?
Well, how's it doing? The Chief Executive, Stephen Hester, says it's doing quite well. He's hitting all his targets for shrinking the balance sheet and improving the cost-to-income ratio and improving the loans-to-deposit ratio. So he's making progress there. The actual operations themselves, not great though. Operating profits fell in most parts of the bank in 2012. They were saved mostly by an improvement in the investment bank, or what's left of it, and by a cut in impairment charges. So overall profits, underlying profits were up, but then after that you had all these extra charges coming in for PPI mis-selling and LIBOR and restructuring and a whole host of other things. So at the bottom of it all there's a big loss. And
presumably as well it would benefit from any pickup in the UK economy, and that's hurting it like all banks here.
Yeah, absolutely. I mean, once the economy picks up, they've got the structure in place to benefit from that, but there's no sign of that yet, and they're still shrinking, and their net interest margins are still fairly thin.
Okay, so what else does RBS now need to do to sell down the government stake eventually? It's got this bank in the US, for example.
Yeah, so it's looking to now float off a part of the US bank Citizens in the next 2 years at some point, and also it's going to shrink its investment bank further. Risk-weighted assets plan to fall another 20% or so to 80 billion over the next couple of years. The reason is that RBS will probably have to raise more capital. We'll hear from the UK regulators in the next few weeks about how much more capital it will have to raise, but it will have to raise some, and these are the two areas, the US business and the investment bank, that Stephen Hester has chosen to shrink, probably for politically sensitive reasons.
And it needs to get rid of some branches in the UK, if I recall.
Yeah, there's still these branches that it was going to sell to Santander. That sale collapsed. It still needs to find a buyer or float them off. It's supposed to happen by the end of this year. It's likely to take longer than that, so that also will be dragging on for the next couple of years while they sort out what to do with that.
Is there any point discussing valuation with a bank like this?
Well, it'll be clearer once the government starts to sell its stake. And the big impediment to it acting like a normal bank is the fact that the government owns 80% of it. And when Stephen Hester has decisions to make, he's got to think a bit about what's the most politically expedient decision to make. I think it would be better for everyone if the government just gets on with selling down its stake so it can act more normally as any commercial bank would.
Well, before you can value anything, you need to get to some idea of normalised earnings, and it sounds like we are years away from that in RBS's case. Thank you very much for that update.